As the financial world continues to digest last night's forecasts of a mild US recession and slower global growth from the IMF, there are warnings tonight Australia may not be immune from not just a slowdown, but a recession of its own. Professor Edward Altman is Professor of Finance at New York University's Stern School of Business. He spent 40 years building an international reputation for his work analysing corporate bankruptcies, credit policies and risk management. He's been brought to Australia by KPMG and has spent the past few days meeting all Australia's big banks and many of the smaller players as well. I spoke to Professor Altman in Sydney earlier today. Professor Altman, welcome to Late Line Business.
Thank you. Well, it's great to be here.
We know we're in a credit crisis. We know that the easy money and lax lending led to the blow-up in credit markets. What we don't know is where it ends. What's your reading of the situation right now?
Well, a great deal of the impact has already been felt, particularly in the United States, beginning now to be felt more seriously in Western Europe, and I think it will be spread throughout the world, if not already. And even in Australia, I think you're beginning to certainly have the impact here. So it's not ended yet. And we have a saying in the United States, another shoe will drop, and I'm sure that's going to happen. And one of the reasons why I'm here is to talk about what shoes might drop and whether or not we should really get panicked about it or not.
Well, indeed, should we?
In some cases, if it's something totally unexpected, yes. In most cases, it should have been expected, but the markets seem to be so skittish now that even things that should have been expected tend not to be, and then there's a lot of grief afterwards.
What are you anticipating? What shoes are you anticipating will drop?
Well, one shoe deals with the corporate default rate. We've seen a big increase, of course, in the mortgage-backed securities, the subprime problem in the U.S., and we've seen the cost of interest rise dramatically, not only for corporates, but for financial institutions throughout the world. What we haven't seen yet is an increase in the corporate default rate. And that's an area that I've studied very carefully, and I'm convinced that's going to start happening. So the question is, when it starts happening, rather than if it starts happening, what will be the reaction? Will it be considered to be such bad news that the costs of interest and the problems in the economies will magnify, or will be taken as something that we should have expected and there's nothing wrong with it and the market is fully discounting that already?
When you say corporate default rate, do you simply mean in the financial services sector, or are you actually talking far more broadly? Are you talking here of where Wall Street hits Main Street?
Yes, exactly. I'm talking much more broadly. I'm talking about service firms, I'm talking about industrial companies, as well as financial companies. In fact, financials have led the way, if you will, in terms of financial stress. But if you look at the credit quality, at least in the United States, of large numbers of firms that have levered up dramatically, one should have already observed a high degree of defaults. But it hasn't happened yet. And one of the reasons is we had this huge amount of global liquidity, which has now dried up. And we're already seeing that beginning to change. Already in the first quarter of this year, something like 80-90% of all defaults in dollars and even more so in numbers have occurred in the first quarter compared to all of last year and the year before, keeping in mind that those are very low years to start with.
But if that default rate does increase, as you're anticipating, what do you think the reaction is going to be?
Well, it shouldn't be so dramatic if it's kept within ranges that I'm forecasting, which is around a 4.6% default rate in the U.S. high-yield bond market, and probably a little higher in the so-called leveraged loan market, which is the loans to highly leveraged companies. What will be the problem is if the U.S. economy goes into a serious recession. I think we're all agreed now that the U.S. economy is in a recession, even though there are probably still some diehards who say, no, it's just a slowdown. Even the Federal Reserve Bank is now clearly saying that, and indeed some people are saying that about the global economy, which we can get to. If, however, the recession is severe, then I think all bets are off, and the default rate could rise to double and triple what even I'm forecasting.
But that's chicken and egg, isn't it, really? I mean, the more defaults we're going to get, the higher the chance that the recession will be longer and deeper.
Exactly. Both will feed on each other.
You talked before about what it means for the global economy, and we saw this yesterday, the IMF saying there's a 25% chance of a global recession. To what extent is the rest of the world immune or resilient to what happens in the US, and to what extent are we all headed for a problem?
I travel a lot lately in Western Europe and here in Australia and in Asia, and I've heard that comment quite a bit, that, well, no longer is the U.S. economy all that influential.
The decoupling scenario.
Exactly. I don't believe it. And the reason why I don't believe it is that it doesn't have to be a direct impact. It could be an indirect. For example, for Australia's situation, if Asia, for example, is impacted by the fact that the United States can no longer import as much as, in fact, they're importing less now and exporting more for several reasons, if we affect their economy, there's going to be a knock-on effect in the countries that they buy from, like Australia. Another reason is the fact that some economies, again like Australia, is very dependent upon foreign financings. And if the financings begin to either dry up or get more difficult, much higher costs.
Well, we're already seeing that. I mean, with our major banks. You've been here, you've talked to all our major banks, you've talked to a number of other players in that space as well. What is your reading of how exposed and vulnerable that sector in this country is?
You have some great strengths. You've got a much lower leveraged corporate sector. You have a much more sanguine and, I think, well-balanced mortgage situation. And you have the banks having a very, at least the big ones, a very large deposit base to raise funds at relatively cheap costs. And so the vulnerability might be downgrades rather than defaults. But downgrades means higher costs, and if there's a knock-on effect from the U.S. Recession and it spreads, I think that the Australian economy, while better suited than most, is also potentially vulnerable.
So what you're essentially saying is that don't be smug. Don't be sanguine.
At all. I mean, treat the situation as serious it is, and at the same time, play up your strengths. And make loans to good companies. Don't make loans to poor companies, rather than letting the higher cost of funding that the banks are all facing cause you to shut out lending completely, which is happening in other countries.
What have you learned from what our banks have told you over the past few days about the current, I suppose, broader economic climate here? Because, of course, you'd be aware the great focus is on inflation, and yet there is an increasing body of evidence that the economy is slowing. Certainly the banks are being squeezed by their funding costs already. We've had a surprise upgrade in the provisions for bad debts from banks like the ANZ.
Correct.
Do you think that we're heading for a harder landing, if I can put it that way, than perhaps many are anticipating?
I don't think I've been here long enough to know, the soft landing, hard landing. I do believe there's a much greater chance of a slowdown and a recession, even, than there was just a short time ago, maybe as little as a couple months ago.
So how high is that chance?
I couldn't really give you a number. I wish I could. I just don't know enough about the nitty-gritty, if you will, of the Australian economy. I would say, though, if the U.S. has a serious recession, the chances are significant that it will end up in a recession here as well.
Well, they're all very sobering thoughts. Professor Altman, many thanks for joining us.
My pleasure. Thank you, Ali.